It's one of the oldest resources in human history and still one of the most contested. But today, Africa's gold isn't just being pulled from the ground by corporations, it's being claimed, controlled, and invested in by monarchs. In royal palaces and behind closed boardroom doors, a new gold rush is underway. And this time, the crowns are doing the digging. When Managem Group, the Moroccan mining firm backed by King Mohammed VI Al Mada Holding Company, closed a $197 million deal to acquire the Bodo Gold project in Senegal, it wasn't just another corporate expansion, it was a calculated move that signaled how seriously North African royalty is positioning itself within West Africa's resource landscape. Bodo wasn't the only asset changing hands in that deal. Managem scooped up several mines from Canada's Lamb Gold for a total of $282 million. But Bodo stood out because of its potential, projected to produce over 130,000 ounces of gold annually once fully operational. For Morocco's royal family, this wasn't a leap into the unknown. Managem has operated for decades in mining, including gold, silver, cobalt, and copper. What made this deal different was the geographic reach and political weight behind it. With existing operations already in Mali, Guinea, and Sudan, adding Senegal gave them a tighter grip on the gold-rich Sahel and West African corridor. These are not casual investments, they reflect a wider strategy by Moroccan leadership to turn state-aligned businesses into Pan-African players. Morocco doesn't have massive oil or gas reserves like Algeria or Nigeria. Instead, it's long used state-owned and monarch-linked firms as vehicles for influence. The Al Mada Group, for instance, isn't just tied to mining, it has stakes in finance, energy, telecommunications, and tourism, and it operates with a level of independence that lets it move like a private firm, but with the resources of a state behind it. In Senegal, President Macky Sall's government has been focused on balancing foreign interest with local benefit. Deals like Bodo walk a fine line, they bring in capital and jobs, but also spotlight the risk of foreign-dominated resource sectors. For now, Managem appears committed to staying visible on the ground. They have pledged to continue working with local contractors and communities, and the project is expected to create long-term employment in the Kendougou region. From a financial perspective, gold remains a solid bet. Prices have stayed strong in uncertain global markets, and for companies like Managem, owning assets outright gives them more control over production timelines and costs. Unlike joint ventures or partnerships that often get mired in bureaucracy, full ownership allows for quicker scaling. But beyond economics, there's a symbolic edge to all of this. A North African monarchy expanding its reach into sub-Saharan mining is more than just business. It reflects Morocco's broader foreign policy aim to build deeper economic ties across Africa that don't rely on traditional Western partnerships. And gold, as it always has, still plays a central role in that ambition. In Ghana, the name Sam E. Jonah carries weight, not just in business circles but also in traditional ones. Though he doesn't often draw attention to it, Jonah has royal Fanti lineage, a connection that quietly underscores his role as both a businessman and public figure. His story isn't flashy, but it says a lot about how influence and heritage can work together in real ways. Jonah made his name in mining, a sector central to Ghana's economy and history. By the early 1990s, he had already climbed to the top of Ashanti Goldfields, a company that was once the pride of West African industry. When it merged with Anglo Gold in 2004 to form Anglo Gold Ashanti, one of the largest gold producers in the world, he became its first African president. That alone would have made him a notable figure, but Jonah didn't stop there. He went on to form Jonah Capital, a private investment firm based in Johannesburg with interests across multiple African countries. The firm isn't limited to mining, its portfolio includes real estate, energy, and infrastructure, but mining is still at the core. He's used that foundation to build relationships with governments and industry leaders, often acting as a bridge between large-scale operations and local realities. What's made Jonah different from other executives is how often he's talked about accountability. He has been vocal about governance issues in Africa, calling for more responsible leadership not just in business but in politics too. And in mining, a sector known for environmental risks and social friction, he has pushed for companies to engage local communities honestly. That doesn't mean every deal has been perfect, but his public stance has earned him respect in places where trust is hard to come by. He has also kept a relatively low profile compared to others with similar power. You won't see Jonah hosting flashy or splashy events or building monuments to himself. Instead, his influence shows up in boardrooms and in advisory councils, including roles with companies like Vodafone and Standard Bank and international groups like the African Union's Private Sector Advisory Board. Jonah's royal heritage doesn't define him, but it adds a layer to how people relate to him in Ghana and beyond. In a part of the world where tradition and business still mix, that background matters. And when you combine it with decades of work in one of the continent's most complicated industries, what you get isn't just a successful man, it's someone who's learned how to navigate power quietly with consistency. In Eswatini, where power is deeply centralized under King Mswati III, business and the monarchy often move in parallel, sometimes in silence. Gold has quietly become part of that picture. Through companies like RME Bullion, reportedly connected to royal interests, Eswatini has started dipping its toes into the gold industry. The plan, at least in paper, involves refining and exporting gold to increase national revenue. But like many things tied to the royal household, the details are limited and the lines between public interest and personal gain are hard to trace. RME Bullion operates in a space that's typically off-limits to average citizens. Gold refining requires infrastructure, permits, and cross-border logistics, all of which suggest top-level involvement. Eswatini is not widely known for its mineral output, and gold isn't mined at scale the way it is in neighboring South Africa. That makes refining an odd place to start unless you have access to gold from elsewhere. Some suspect that this gold may be imported from the region, processed in Eswatini for its favorable conditions, and then exported under a different label. This strategy could work. Gold refined domestically could be marked as Eswatini origin for the purposes of certain trade advantages, especially with countries that have favorable trade agreements. But it also opens the door to questions. Who benefits? Who oversees the process? The country has long struggled with issues around governance, and resource management is no exception. Parliamentarians have raised concerns about the opacity surrounding the king's business dealings, and with gold, these stakes are higher. It's a high-value commodity, easily moved and tough to track once it leaves the refinery. Still, in a nation with limited economic engines, the allure of gold is hard to ignore. The government has framed these ventures as steps toward economic independence, hinting at job creation and new investment. But without clear frameworks for accountability, it's hard for locals to believe they'll see any real change. As of now, very little has trickled down in terms of public benefit, and most of the narrative remains controlled through state media. In many ways, Eswatini's gold push mirrors what's happened elsewhere in Africa, where natural resources offer both promise and peril. When royalty steps into the mining space, it often does so behind closed doors, blending tradition with profit. And in a country like Eswatini, where the king's influence stretches across all aspects of life, that overlap is more than symbolic. It's systematic. In 2024, the government of Burkina Faso made a bold move. It took full control of two of its biggest gold mines, Bungu and Wanian. These mines had been operated by international companies, including Canada's Endeavour Mining, for years. But after months of political tension, legal disputes, and shifting alliances, the government decided it was time to take over. Gold is Burkina Faso's most important export. For a company that's long struggled with poverty and instability, the idea of foreign firms pulling millions from the ground while communities nearby lacked running water or decent roads had become harder to ignore. So, When Prime Minister Apollinaire Kailim de Tambila announced the nationalizations, he framed it as a way to reclaim economic sovereignty. His message was simple: the profits from Burkina Faso's resources should stay in Burkina Faso. This wasn't just a spur-of-the-moment reaction. The government had already been signaling a more assertive approach to resource management. Earlier in the year, they created a state-owned company, Sodimas SA, to take over operations in strategic sectors. The gold mines were a natural place to start. Not only were they some of the most profitable operations in the country, but their ownership structures also made them vulnerable to political shifts. As foreign firms weighed risks and liabilities, the state stepped in. There are obvious risks with nationalization. These operations aren't simple to run, they require capital, expertise, and long-term planning. If mismanaged, production can slow down, investors can back away, and local economies can suffer. But in the short term, the decision was popular with many Burkinabe citizens who have felt left out of the resource boom that's benefited multinationals more than villages near the mines. This shift isn't unique to Burkina Faso. Other African countries have started questioning the value of deals made years ago, often under different governments with limited oversight. It's part of a growing trend where natural resources are no longer just seen as trade assets, but as tools for national development. Whether this approach will deliver more long-term value is still up for debate, but it's clear that the old rules of resource extraction are changing. The challenge now is turning ownership into benefit. Reclaiming a mine is one thing, running it well, reinvesting in communities, and building trust is another. If Burkina Faso can do that, it won't just be a symbolic win, it'll be a real shift in how the country builds its future. Patrice Motsepe's story starts where royalty and business intersect. Born into the Sawana royal family in Soweto in 1962, Motsepe didn't inherit his fortune, he built it, brick by brick, deal by deal. His father ran a spaza shop and later owned a small mine services business, where young Patrice got a front row view of how the mining industry worked. That exposure planted the seed, but it was in the 1990s, during South Africa's post-apartheid economic reforms, that he made his move. At a time when the government pushed black economic empowerment to correct historic inequalities, Motsepe saw an opening. He founded American Rainbow Minerals and negotiated a string of deals that were savvy, not just symbolic. He didn't go after high-risk prospects or hype, he focused on real assets. Gold, platinum, and ferrous metals that could generate steady returns. One of his most notable early moves was acquiring low-performing gold mines from Anglo Gold at a discount, restructuring them and turning them around. His ascent wasn't just about timing. Motsepe combined legal training. He was the first black partner at Bowman Gilfillan law firm, with a sharp sense of market dynamics. African Rainbow Minerals didn't chase headlines, it pursued profitability. The company eventually expanded into joint ventures with giants like Glencore and Harmony Gold, cementing its place in the top tier of African mining. What sets Motsepe apart isn't just his net worth, estimated in the billions, it's how he straddles two worlds. As a member of the royal Bafokeng family, he carries a lineage steeped in tradition. As a businessman, he operates on a global stage. That balance allows him to maintain credibility across corporate boardrooms and traditional leadership circles. His cousin, King Leroux Molot-Leji of the Royal Bafokeng Nation, oversees a community that has used its own mineral royalties to invest in education, infrastructure, and local development, making the Bafokeng one of the most economically empowered communities in Africa. Still, Motsepe's wealth hasn't escaped scrutiny. Some critics argue that his rise benefited from politically connected deals. Others say he played within the system better than anyone else, but even they can't deny the impact. Motsepe has channeled much of his wealth into philanthropy through the Motsepe Foundation, pledging half his fortune to causes ranging from agriculture to education. In a continent where royalty often exists apart from industry, Motsepe stands out. He didn't just inherit a title, he built something tangible from it. His journey shows what can happen when legacy and leverage meet smart strategy. When monarchs are involved in gold mining, the effects can be seen far beyond the fence lines of the mines themselves. In some areas, these ventures bring tangible benefits. Roads get built, clinics open, and jobs appear where none existed before. But the picture isn't always that simple. The presence of royalty can also add a layer of complexity that shapes who wins, who waits, and who gets left out. In parts of Ghana, for example, local chiefs have often played a role in negotiating access to land for mining operations. When these chiefs have direct stakes in the companies operating on their land, it can speed up development, but it also raises questions. Who speaks for the people? Is the compensation shared evenly, or does it mostly benefit those at the top of the traditional hierarchy? Some mining projects have delivered real progress. In Mali, where certain village chiefs partnered with mining firms, communities have seen new schools and water systems. These are not small improvements. In places where government services are stretched thin or simply absent, a working borehole or a stock clinic can change daily life. But even then, residents have voiced concerns about the long-term costs. Dust from blasting, water contamination, and a sense that they don't have much say in decisions made behind closed doors. Royal ownership adds a layer of sensitivity. When a monarch is involved, especially in countries where traditional leadership still carries real weight, people often feel pressure to stay quiet. Complaining about noise or pollution from a mine owned by a king or chief isn't the same as complaining about a foreign corporation. It's personal, and in small communities, that silence can be heavy. There is also the challenge of accountability. When mines are owned by public companies, there are reports, audits, and at least in theory, oversight. But when ownership sits with a royal house or a traditional leader's private business, the flow of money is often hard to trace. That makes it difficult to measure whether the wealth generated is being reinvested fairly. Still, some monarchs have used their roles to push for better terms for mining companies and ensure that royalties feed into local development funds. The results vary depending on who's in charge, what the contracts say, and how strong the local institutions are. At the end of the day, the impact depends not just on who owns the mine, but on how seriously they take the responsibility that comes with it. So, the stakes are high and the world is watching. What are your thoughts on the role of African monarchs in the gold mining industry? Leave your thoughts in the comments below.